Good afternoon, guys, and welcome to the podcast. I've got a fantastic guest for you today, all of you financially savvy enthusiasts, Ahuva Gruen, coming out of New Jersey. And she is the outsourced CFO and she's founder of AG Financial Services. We'll talk about that. She helps people fix financials, make them more profitable via clarification, helps people to scale, and she changes overwhelm and confusion into clarity. And so I'm really happy to have her on for a fantastic discussion. Ahuva, welcome.
Hi. Thank you, Dr. Lou, for having me on. I'm so excited. I'm looking forward.
Yeah, I love this podcast. We are all on a first name basis. So talk about your journey, how you got started, and we will dive right into it.
I was a businesswoman from when I was 5 years old. I opened my first business. I was selling candy. I bought it wholesale in the wholesaler nearby, and I bought it for 7 cents, sold it a quarter. In high school, was cutting people's hair. My mother had a business, so I would come home from school and go into the home-based business and watch my mother for hours. So it was natural that when I graduated that I went for accounting, which is business related. And I started off as a bookkeeper, rose to accountant, CFO, controller. And then I started to see by helping family and friends in their business, I saw a trend that I cannot stand. They're good at what services they provide or what they sold, but they were terrible at running the financial. And it really hurts the bottom line. So when I left my company in COVID and I thought what I wanted to do next, I decided to follow my passion and become a fractional CFO, which is helping businesses. CFO stands for Chief Financial Officer. It's like a consultant helping businesses prosper, helping them with the financial, what they're doing right, what they're doing wrong, where we're leaving money on the table, where they're leaking out money, how they could scale really to get to the next level. And everything hits the financial. So if a business owner is not financial savvy or he doesn't have time, the best is to get a CFO. And if you're not big enough to need a full-time CFO, fractional CFO is very effective, very financially worth it. So that's what led me into my business, to what I do.
Really interesting. And we've had this idea of a fractional CFO and you described what it is. And one question I have for you is, how does hiring one fractional CFO differ from having an in-house financial team or traditional bookkeeping services?
Great question. First of all, fractional is that it's part-time. It's as a consultant. They're not paying benefits. They're not paying employer taxes. They're not paying a full-time salary. So that's what's fractional if they're not big enough to need a full-time. Now, in accounting world, there's different areas. There's bookkeeping, which is data entry. There's compliance work, which is income taxes and compliance to the government. But there's a whole world of controller and CFO services to really look at the business, the gut of the business, and see what's going on. If you just wait for your taxes, then you lost a whole year. Yeah, your tax accountant said you lost money, you did well, you could have improved it. But if you wait till the end of the year, then you lost a whole year. If you left money on the table, you lost a whole year making more money. So there's bookkeeping, which is data entry, there's the compliance, and then what I do is like strategic controlling the money, accounting, accountability, and like really helping the company go to the next level, not just spin the wheel.
Yeah. And there's a really great book that a lot of CFOs recommend, and it's called Profit First, which is really interesting. And it helps the business owners avoid this trap and kind of pay themselves first and have enough for like taxes. And so my next question for you is, which is interesting.
I'll just expand on that. On Profit First is that when you're looking at your financials to really know how well you're doing, if you're not taking out money, you'll get burnt out. The business owner will get burnt out and they don't really know how financially healthy the company is. Number one is having clean books, having clear books, not paying different things from different companies, paying the business owner, not just paying his personal expenses from the business. Keep your personal separate, but take a salary depending on how big, how well the company is, but take a salary, set aside money for taxes, not just, the end of the year or when you're giving your taxes, I don't know, where am I going to pay it? It's having clarity and but there's a lot, that's a great book. And there's a book, Who Not How, by Dan Sullivan, which talks about do what you're best at, delegate the rest. There's a lot of good financial books, but Profit First is a good book. It's also a good book for people to use for their business and for their personal. It's like you get some money in a hot month, you got money in, don't just spend it all. Don't just go do a new website, buy new software, buy new furniture. You have to put aside money for the slow month. Put aside money for taxes. Put aside money for take home for yourself, for your family, and for whatever else you want.
Yeah. And I love that book, Who Not How, and then Profit First. One thing you were talking about in this area, what are some of the most common financial misunderstandings or mistakes early business owners making, such, for example, profitability versus cash flow?
Great point. I love that point. Number one, a business has to make sure they're profitable. They have to really calculate properly what's their cost? What's their cost of goods sold? What's the cost of their service? How much it costs? And then they have to have proper profit margin. So you can't just look at the sales. You have to look at the bottom line profit. Then your profit minus your direct cost and indirect cost, your overhead, and then you get net profit margin. So that's super important. But it's also important is cash flow. And I work on with businesses, the processes. What's the process of how long they have to pay their vendors to make sure they get deposit? When they get paid, it's all like cash flow is the money coming in and out of your business. You could have good profit, but it's all going to pay down loans. I had a client the other day. He made $40,000 in a month profit. He said, "Ahuva, where's the money? I didn't take home $40,000 to my family." And I said to him, "We'll look again and I'll explain you on the balance sheet. There's profit and loss, which is your expenses and your income. And then this balance sheet, which is assets and liability. It's really important because if you have a inventory in your business, your inventory eating up cash. It's not an expense until you sell it. Then it hits the cost of goods. But you have to have cash in order to buy the inventory from China, from in the States, wherever you're buying it. If you have your private label or whatever, and you have to have the cash to buy it. Is it going to pay down loans? Is it going to pay down your mortgage? You won't see that on the profit or loss. If your receivables are very high, if your customers are not paying till 2 months later, 3 months later, a year later, you're not going to have the cash flow to pay your workers, your overhead, or anything. If it's an installment project, make sure to have the money to deposit, be able to stomach, to be able to handle the cash flow, to get paid at the end, or whatever percentage to cover the cost of doing the job or the project or the item you're selling.
Yeah. And it's really interesting because I wanted to point that out because a lot of business owners, for example, a lot of self-employed doctors, lawyers, dentists, they're like, yeah, I made $1 million, but then they look at it and then like they got to pay taxes and they're in the red. They don't have to worry. They're like, we made $1 million. Where did all the cash go? And this kind of profit first and expenses and the buckets and the profit margins too. Those are all key. And it's not just how much you make, but it's like where you allocate it. And so and also paying yourself. And I know a lot of business owners are like, yeah, we've been hustling, but our business is going under. It's really important.
Another thing I'll add in with doctors and lawyers and professionals, they could have very good profit margins, but if it's not managed correctly, I have some businesses in those industries. If they don't bill the clients, for example, a lawyer, if you don't bill the clients and you bill them months later, you're not going to get the money in. So yeah, you could have a nice profit at the end, but you're not getting the money in. You're not going to be able to pay your bills. You're not going to be able to take home money. If you don't track your hours, if your employees, your doctors, your staff, if you're a law firm, your attorneys, if you're unbilled hours, then you can have great profit margin. It's not going to help you. If you don't put money aside and you just spend and spend, if you're billing insurance, the doctor, and you don't bill properly, you don't bill on time, it's going to hit your profit margins. It's going to hit your cash flow.
Yeah, so well said. Next question I have for you is, so talk about this. What basically you help business owners achieve financial clarity, and also there's a lot of confusion. How do you help business owners achieve financial clarity and impact a company's ability to grow and scale effectively?
Number one, when I go into a business, I make sure the books are clean. And the number one, because you have to know what you're looking at. Number two, I look at the 4 P's: people, processes, profit, and products, to see what's going on. If they're losing money, if the profit margin, if they're making money, are the clients happy? Everything hits the bottom line. Are the clients happy? Do they have good practices? Are the employees doing the right amount of work? Are they doing too much? You lose money. If you're doing too little and you have to go back and do things again, then you're also losing money. Like, really to look at the whole business and really look what's going on. Look which products, which services, or which location is making money, and then go focus on that. Some things you can't make much money on, industry standard, you can't raise it, so don't focus on it unless it's a lead magnet. If you didn't do well on a job, on a product, why? What went wrong? Could it be prevented? Was the price right? Like, really digging into the financial, analyzing, speaking to the staff, speaking to the CEO, really seeing like a holistic approach. What's going wrong? Where we could raise prices, where we could focus on, where is leaving money on the table, where we could make more money. That's what I do, and that's what I love. I love turning around business. I love helping businesses grow and succeed.
Yeah. Really, the next adjacent question to you is, when people look to scale, everybody's thinking, oh, I got to grow my business. What key strategies should businesses focus on when they're looking to scale up and increase profitability? But also, is scaling up necessarily a good thing? Because I've talked a lot, some are like, yeah, well, if we scale up, we're going to burn out or miss my kid's soccer game, or I can't go on this. So talk about that kind of work-life integration and scaling up.
When you scale up, you have to make sure, business owners, we talk about scaling up, but making more money. Because sometimes when people get bigger, they don't make much money. They don't make more money. So number one, before you scale, before you hire more staff, make sure your staff is being used efficient. Make sure they don't have extra time. So first, I tell businesses, make sure that you're stable, that you're doing well before you go scale. And if you scale up properly, focus. I read recently a great book. It was great. It was called Great at Work. And I don't remember the author.
Yeah.
But if you focus on, there's a few good lines. Do less and obsess was one of his lines, which, what does it mean? Look at where the most profit making is, where is making the biggest dent to your clients, and focus on that. It's not a matter of doing more and more hours. It's a matter of delegating properly, doing what's your best, delegating the rest, making sure if you're taking a line of credits to expand at what interest rate. Another one of his lines was, do as little as you can or as much, I forgot it, much as you must. Meaning, to do as little as you can and focus on that, but don't do too little and miss out important pieces. I really think that plays. And if you delegate, not just the business owner doing so much, and every business has a sweet spot, but also when you grow, you have to have the funds. You have to have the cash flow. If a painter gets a huge, I think it was in the Profit First book gave an example, painter gets a huge job. But if he doesn't have money to buy the supplies, to pay his workers, it won't work.
Yeah.
It has to be done smartly. I had a e-commerce business. He wanted to expand to sell another thing. But in the past, if he did impulsively and he didn't look carefully, he didn't make sure he had the cash flow to have the cash to make sure he had good price. He was getting at a good price, that he'd be able to sell it more. There's a market. Then what? Then you stuck with inventory that you can't sell, and it's holding down cash. It's king. On a service, it's a huge job. But if you're not making money, then what? Then you're losing money. A professional, a lawyer, he could take a big client, but if he gives us a flat rate, and then he doesn't have, and then he's too many hours and he lost money. You have to scale it. You have to scale smartly. If he takes, even if it's hourly, do you have the overhead to handle it? Could you handle manufacturing? Do you have the cash flow to get the parts? You want to get clients and keep them long term. It's not just matter if, in order to scale to do well, it's not just matter to get the clients. You want to be able to retain the clients or get referrals. So you have to really do the job properly too.
Yeah, I really love that. And it's really fascinating conversation. So talking about how can people find out more about you and visit you? Because basically, I love how you basically take all of this and you help people achieve clarity, and then you using education, remove any of the confusion. And so how can people find you and follow you and reach out to you and see the work that you're doing?
Sure. On LinkedIn, Ahuva Gruen, or on my website, ahuvacfo.com. And they could DM me, they could go on my website, they could call me. And I have a freebie for the listeners of your show, the 10 biggest mistakes business owners make, and more important, how to avoid them. They could get it on DM me on LinkedIn or on my website.
Yeah, really great conversation. Thanks so much for coming on. And
Thanks for having me on. It's been a pleasure.